Well, it's time now to bring you the latest business news. I'm joined in the studio by France 24's Catherine Bennett. Hello to you, Catherine. Everyone has their eyes on the US this week. Of course, vote counting still underway. Today, a new jobs report has come out. What can you tell us?
Well, unemployment in the US went down in October by a full percentage point to 6.9%. Now, that's a lot better than expected and came with more jobs added too. The economy regained 638,000 jobs last month. The biggest job gains were in the sector that suffered the most during the pandemic, leisure and hospitality, where jobs jumped 271,000. Within that, bar and restaurant jobs added 192,000, so we're seeing a good recovery in that industry. Now, there are two factors, however, that mean that positive trend is unlikely to last long into the final quarter of the year. Firstly, the increasing rate of coronavirus cases, which will probably weigh on the American people. They may decide to hold back on activities like shopping, travelling and eating out. And secondly, it seems rather obvious to say it, but winter is coming. And with colder weather, certain businesses such as bars and restaurants won't be able to use outside space. And so they're going to lose out as a result. Now, while these jobs figures are better than expected, it still represents the smallest monthly number of hires in 5 months. So that indicates that the economy is starting to hit a slow patch after rebounding sharply in the third quarter of this year. Jerome Powell, the chair of the US Federal Reserve, said that the increasing numbers of coronavirus cases are going to hit the economy hard, and that a real recovery won't happen until people are confident enough to go out and participate in the economy. And for that, he said that a new fiscal stimulus is essential. He did say that the central bank would support the economy for as long as is necessary, particularly as the pandemic has served to highlight structural inequality in American society.
The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the services sector, for women, and for African Americans and Hispanics.
A divided Congress has failed to pass a new stimulus plan since their $2.2 trillion package back in March. Now, that stimulus has mostly expired, and Congress has been haggling over a new fiscal injection into the US economy without reaching an agreement. And this is why the race for the Senate and the House of Representatives is so important economically speaking. We may not know who has control of the Senate until as late as 5th of January, if Senate races in the state of Georgia head into a runoff. If Congress remains divided between Republicans and Democrats, then any support package pushed through will probably be smaller than if the Democrats had had a clear win. We saw this earlier when the Republican leader of the Senate, Mitch McConnell, said the latest unemployment figures only back up his idea that a smaller coronavirus stimulus package is what the economy needs. Well, we can take a look at how the markets are reacting to that, and they're slipping after highs in trading across the week. It's, of course, the election uncertainty that's weighing on markets in the US and the gridlock in Congress, as investors agree that a generous fiscal stimulus is necessary for the economy. The Dow Jones fell 0.1%, while the S&P 500 and the Nasdaq are hovering around the flat line. European markets also closed lower Friday, with Frankfurt's DAX leading the downwards trend by 0.7%. The CAC 40 fell almost 0.5%, while London's FTSE just hovered over the flat line. And of course, we'll be keeping you up to date on Wall Street and everything that's happening in the markets for the rest of this evening.
All right, Catherine, thanking you for the roundup of the business news there. We'll be speaking to you